We are at war, a health war, surely.
Worst is yet to come. There are still dark days ahead.
Not since World War II has there been such a challenge to our country.
With European leaders on wartime footing, their lieutenants have been tasked with procuring the fiscal weaponry needed to cushion the fallout from the deadly coronavirus. Cannons already being fired. $800 billion worth of aid in Germany, $320 billion in France, $215 billion in Spain. But some analysts say it's far from enough to support the millions of European workers, businesses, and citizens facing economic ruin because of the pandemic.
The challenge our economies are facing today is in no way similar to the previous crisis. We are committed to explore all possibilities necessary to support our economies get through these difficult times.
But fiscal solidarity won't come so easily. Mario Centeno, president of the Eurogroup, says that while there's broad support to tap the bloc's $450 billion bailout fund, the details on how to do that still need to be worked out. One option is credit lines, which act as an insurance policy against economic shocks.
The funds made available could amount to up to 2% of the country's GDP. If the credit line is drawn, the funds would be used to finance the country's immediate health care and economic responses to the crisis.
A more controversial way to access cash would be the issuance of corona bonds, a new type of debt backed by all EU governments. Italy and Spain are pushing hard for this option. But richer nations like Germany and the Netherlands are reluctant to pool risk with less stable economies. EU finance ministers are leaving the final decision on how to best mitigate the economic fallout to EU leaders. They'll be meeting on Thursday. If a deal can be struck, a bloc-wide economic bazooka could be rolled out within weeks, if not days. Tony Waterman, CGTN, Brussels.